Hello and happy Friday. I am Ryan Faluna from the Benzinga Pro team, and I am here with the one and only Jonathan Mallard. We call him J-Quack around the office. Jonathan, how you doing?
I'm doing great, Ryan. Glad to be here with you. I moved over to this. We call it the igloo in the Detroit office because Jason Resnick likes his air conditioning. But hopefully, we have better Wi-Fi reception here.
All right, sounds good. Ryan Faluna likes his air conditioning too, so I'm with Jason on that one. One of the things that I wanted to talk about today was support and resistance. We talk about this a lot in some of our videos. We talk about this a lot when we're using the movers tool, when we're kind of looking into where to exit and where to enter. And I just wanted to briefly kind of discuss this because I think sometimes this either gets mixed up or confused. So first of all, support and resistance can be determined using a number of different methods, right? Most notably, we like to use the tops and bottoms of candlesticks, right? Because that shows where the buyers stopped buying or where the sellers stopped selling. But there are other ways that you can do this as well. And perhaps one of the easiest ones or the most common ones to do is in fact using moving averages. So right here, I have arguably the two most popular or perhaps the most widely used moving averages. I have the 50-day and the 200-day. And this is super easy to use within the chart tab of Benzinga Pro. And in fact, you can load in more than just these two moving averages, and you can turn them on or off and make them visible depending on what it is that you need. So right here, you can see the yellow line is the 50-day simple moving average. The teal line or the light blue line is the 200-day simple moving average. I've also added other things on here like the 9 EMA, the pink line, and the 500-day moving average, which is that thinner yellow line. I can very easily turn these on or off depending on what it is that I'm looking for. So for our example today, we're going to stick with these two moving averages, the 200-day and the 50-day. And one of the things that you'll notice is that the stock price will often react to this line when it actually comes in contact with it. Now, let's back up a little bit and discuss what this is. The moving average is effectively the price over a certain amount of time, and then you compute an average, and that average is drawn as the line. That's what this actually is. In the case of a simple moving average, it weights every candle the same weight. So a candle, in the case of a 50-day daily chart, a candle from 1 month ago or 30 days ago has just as much weight as a candle from today or yesterday. And this is one of the reasons why this is commonly used. This gives us an idea of where the stock might be going, where the stock might stop and start or reverse its current trend. So if you take a look here at the price of Apple, this is obviously a huge stock, and you can see that as soon as the price during 2020, excuse me, as the stock price is going up, when we eventually sell off, remember, sell-offs are normal. This is a normal part of price discovery. When it sells off, it will often bounce near that line. So you can see right in here, we actually have this green candle. And furthermore, we can tell that's what happened because the wick on the green candle is to the downside. What that means is that the price actually sold off during that day. That candle represents one day. And as the buyers started to step back in, it actually raised the body of that candle, creating this long wick. Can
you zoom in on that a little bit more?
Yeah, let me try to do that. I'm sorry. I thought
that actually, I mean, aside from support and resistance, that is a great lesson right there, just on candlestick analysis.
Yep, absolutely. And the second point that this is the candle, by the way. I did zoom in here. Let me see if I can. There we go. We just got to make this scale a little bit better so it's a little bit easier to see. This is the candle that I'm referring to right down here at the bottom. Okay, this one that now kind of looks like a hammer, right? It's got the stick at the bottom and then the big head right at the top. That's generally a bullish candle, right? A reversal candle. And what we had here is we had this nice big sell-off on volume. We continued to sell off this day, but the buyers eventually took control. So we had a change in sentiment here. And that candle, the volume actually finished green. And then the next day we actually gapped up and then it was off to the races. So the key takeaway here is one could be the candle shape, but the other thing is that as we came in closer to this moving average, that was enticing enough, in this case at least, for the buyers to step in and buy it. Remember, the Apple has been doing really well. Super strong company, lots of great products. People love it. It's in the news all the time. So as you continue to sell a stock like that off, eventually that price becomes too attractive and the buyers step back in. A lot of the times, traders will use moving averages to figure out where these levels are. Now, the one last thing here, and this is incredibly important. In fact, if you listen to nothing else that I say today, this is what you should take away from this. Moving average lines are not, the support and resistance is not a finite point. If I take my cursor and I put it on this line and I align this line to the center of that candle, the value that I get here is 87.73. And you can see up in the upper left corner here, it keeps track of what that value is wherever my cursor is. So as I move my cursor, that value changes. If I line it up right here on this day, it tells me that that moving average there is 87.73. Well, you can see that the low of this candle was 89.15. So it didn't go all the way to the 87.73 number that the moving average is identifying, but it actually went to that area, right? Try to think of support and resistance in terms of areas, not necessarily in terms of finite points. Occasionally, a stock will literally bounce off of the moving average to the penny, but I can't stress enough how rare that actually is. And instead, you actually get things that look like this. Let me reset the chart here. Here's the other thing that you get.
Actually, that's a really helpful button. Can you go back? Where was that reset chart button?
If you right click the chart element, you can get reset chart. There's also a shortcut for Alt R. Really, really helpful if you're adjusting the scale like this, or if you're just going all over the place, right? It's hard to actually get that setting back. But again, have the chart tab active, and then right click and select Alt R. I have some other keyboard mappings on my computer, so I don't think I can actually use, in fact, it pulled up a performance overlay here for my GPU. That's specific to me. But if we take a look right here, you'll notice that there was a price bet. In fact, let me zoom in on that. Since we can so easily reset the chart, let me go ahead and zoom in on that. You can see right in here that there is a battle right around this line. This data is just as valuable as the data we looked at a second ago, where the candle actually formed a reversal candle in that area. What's happening here is, although we're breaking through this moving average line, you can see that we're actually retesting that moving average line the very next day, and then the next day after that. And then this actually goes on 1, 2, 3, 4, 5, 6, 7. You could even say 8 days. In fact, it continues 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So really 17 days in a row where the price was kind of oscillating around this value. That is more than a coincidence. And that really illustrates the point that if you're going to use these in your technical analysis, make sure that you're thinking about this as an area instead of a point. So for example, if your trade plan was to say, okay, well, when this comes back into the 50-day moving average, I'm going to buy it because I'm going to buy it for a bounce. If you had done that right here on September 17th of 2020, you might have been really frustrated, right? Because the next 2 days, the price is actually below the 50-day moving average. But if you give that enough time, eventually, and in this case, this would have been a kind of a long trade, right? Because the price oscillated back and forth. Eventually, it actually broke above this and ran. And you'll also notice that because Apple was in an uptrend, this 50-day moving average also continued to the upside. So the price would increase, as would the 50-day moving average. Now, this type of analysis can be used the same for all of the different moving averages. And again, this light blue or teal line on my screen, this is a 200-day moving average. The period is longer, so that there's more data being taken into account. As a result, the line doesn't change as much. And in this case, the slope is a little bit less. So one of the things about these different support levels is that, generally speaking, the more data that you include, the farther back or the stronger that support level is. That is to say, if a stock breaks through to the downside on the 50-day moving average, like it does right here on February 17th of this year, the next thing that it's going to do is it's probably going to test some other moving averages. And depending on how many you use or how many you track, will depend on how many you put on your screen. For the most part, I like to use 2 or 3 moving averages, the 50, the 100, and the 200. In this case, the only ones that I have visible here are the 50 and the 200. You can see that as we broke through that 50-day moving average, we actually continued down towards the 200-day moving average. And once we hit that moving average, we bounced. In fact, we bounced so hard that we actually crossed through the 50-day moving average to the upside. So when you're using these in your trading plan, first of all, I advise that you use more than one, because one just doesn't tell a complete picture. You want to have more data and more tools in your tool belt. Number two, you want to make sure that you think of these areas, or think of the actual values as areas. As you can see, the price is not always going to stop directly on the line. In fact, it might continue to go above and below that line for several days or even several weeks before the next move is put in. However, it's very, very important to look at these levels, because there are a lot of other traders that are also looking at these levels and potentially taking trades based on where that stock goes to.
Awesome. That was some great analysis, Ryan. And so just what I always like to tell people is that whatever indicator that you're looking at, there's power in the fact in and of itself that other traders are looking at that same indicator. So across the world, there's just thousands and thousands of people looking at Apple's 200-day and 50-day moving averages. And I see some people in the chat here saying, I only use EMA, VWAP, and volume. And then someone else saying, all right, me too, but also Fibonacci. So what you could do to help us out, because we want to keep producing content like this, is, the live chat is great. But after this is done recording, if you can post in the recorded video and just post all of the other indicators that you use, then we can go back and, number one, that helps the YouTube algo, so it helps our channel, but also we can use all those indicators that you use and then make additional videos. So I can see us making a video on VWAP, Fibonacci, EMA, and Ryan, I know you use RSI as well, the relative strength index.
Yeah, that's true. Now, just real quickly, I did make a video on VWAP already, and that's on our help site. I also made a video on Fibonacci retracement and extensions, because I use those regularly, and I would advise that you play around with those too. I'm looking through the comments here. We bet Wall Street. That is a healthy ass chart. Indeed, it is. This is exactly the type of chart that you want to be in, especially for swinger investments. Healthy indeed. And then you had also mentioned the comment, I only use EMA and VWAP. So EMA and VWAP is used in the exact same way. It's just a slightly different way of performing that calculation. So in an exponential moving average, you actually put more weight on the bars that are closer to the current day, right? So a bar from yesterday is going to be weighted higher than a bar from 2 weeks ago. And what this does is this actually changes how the moving average behaves. And because all of these indicators require the price to calculate, it's important to realize that they are, in fact, lagging indicators, right? They're lagging behind the price. They require the price as one of their inputs in order to spit out a value. That, as long as you understand that, that's okay, because you can still get information, or you can still determine where a stock might find support or resistance using these indicators. Just understand that you can't actually get a value until the price value is known. So,
yeah, that's all good. And Narayan is saying, I use 9 and 25 EMA. Is that a right combination?
Yeah,
I can pretty much.
Absolutely. Sorry, and here's the other thing. So it turns out that try not to think about it in terms of right or wrong, because some stocks behave differently. 9 and 25 often used, and actually really close to that is the 9 and 26. In fact, one of the studies that I had on here, I have hidden, is a 926 Ema Cross. And what that is that's basically showing you every time those two moving averages cross one another, the 9 and the 26 EMA. And that's another indicator. So the cross, very similar to the actual moving average line, that point where it crosses is often viewed as a data point. And that can be either bullish or bearish, right? Does it cross through to the upside, or does it cross below to the downside?
Well, this was a nice little crash course here, but stay tuned for more. I sense that there's going to be a lot more longer form content that we can create on this, and then maybe we'll we'll circle back to the technical analysis at least once a week here on the Benzinga Pro Showcase. So thanks again, Ryan. Have a fantastic Friday and weekend, everybody, and we'll see you next week.
Likewise. Take care, folks.
All right, I'm joined now by Jason Shubnell, Benzinga's wrestling correspondent and also our managing editor. What up, folks?
Morning, Spencer. How are you doing today?
Well, I thought we got a new mic. Are you on the? You might be on the wrong microphone input. I think you're on. You're not on your headset. I think you're on a computer.
No.
Go like in StreamYard. Like go to the little. Gear
okay.
Go to the gear settings in there and click on audio and check which mic you're on. I think you might be on the wrong one. But
it says I'm on my headsets.
Okay. All right.
I'll check. I'll switch it up again.
Your headset's very sensitive then. Jeez. I'm hearing like all sorts of things. All right. Anyway, let's just move on. Shubs.
We'll keep it short today.
We'll keep
not to bother anybody.
Okay. Let's talk about Doge. All right. So walk me through what happened. So Chris Kachi, co-host of Pax, like we all know him, just bringing out a quick article last night, right? Like nothing fancy. It's a short article about Doge, and this blew up, right?
This is actually we have crossed the 1 million reader mark, and this is by the end of today. Actually, I believe at this point, this is going to be the most read article that Benzinga has ever had, at least since I've been here in my 8 years.
Really?
It's nuts. This blew. I mean, so this article was posted last night around 7 o'clock. Doge has obviously become the talk of the town and the weird, trading circles with the surge in crypto. And it was just kind of, we do this series every day. If you invested $1,000 in X, Y, and Z stock, 1 year ago, 5 years ago, 10 years ago, here's how much it'd be worth now. Some people love it. These are some of our most read articles each day. Some people hate it because they think it's, what value is this providing for me as a trader or investor now? But given the popularity in Dogecoin, we just thought, let's see what it would be like if you threw some money at Doge, at the start of this year. As crypto always around the holidays, crypto's always, fluctuates in popularity. And it's insane. If you were, bold enough to put a lot of money in Doge back on January 1st this year, you'd have, at least at the time this article was written, you'd have 32,000.
No, that's not even close to being accurate anymore.
And
even the update's wrong, Shubs.
Yes.
This has to be continuously updated.
So where are we at with Doge right now? Have we crossed the 45-cent mark?
I got to go back to my good old coin market cap.
Last I saw was at 42 cents.
We're at 37 cents at the moment.
Okay. So it's correcting a little bit, would you say?
Yeah. Oh,
I don't know.
I'd call it. That's what I'd call it, a correction. Sure. No, but I was actually I was sleeping last night because I went to bed really early, and I got a call from Luke Jacoby. And I was like, oh, do I answer? I'm not going to answer. And then I was like, all right, I'll answer. So I answered the phone, and Luke was like, Spencer, Chris Kachi wrote an article that has 100,000 views in 5 minutes. And I was like, thanks for calling me. And then I hung up the phone.
I mean, and I've never. So this article went up around 7 p.m. last night, and the actual spike in terms of readership occurred around 9:30, 10 o'clock. So it was live for a few hours before I think people just started looking up on Google. As the price of Doge started going up throughout the evening hours last night.
Wait, just to be clear, did Luke call you as well?
He texted me to alert me to the chart, which I also saw. Yeah. I checked our analytics last night just to see how we were doing overnight, and I saw the massive spike. At one point I think we had 30,000 readers on this article reading it at once. So,
dear Lord.
It's some people laugh at it, but 1 million people have seeked out reading this article. Maybe it's just for fun because Doge is worth, at least at the time the article was written, it was worth less than a cent, or it was just a few cents maybe. So I don't know, if you got some pocket change out there, I guess that's just what people are doing now with their stimulus money. And
don't do the FOMO. don't become a sucker because we all know that the second that we buy is going to be the top.
Always do your due diligence.
I don't know. This is madness, but that's really interesting. That this is going to be our most read story ever. Do you happen to know what our most read story ever is? Do you know?
Off the top of my head, I don't right now.
Okay. Now I'm interested.
Yeah, but the trends speak volumes. This week alone, several articles written about Doge, many of which are focused on Elon Musk tweeting about it every night around 1 a.m. or 10 p.m. whenever it is. Those are always some of our most read articles every single day, and this even goes back earlier this year during the GameStop frenzy. Doge and Bitcoin weren't nearly as popular as they are now, or as they have been over the past month. But those articles back then were oftentimes our most read articles of the week, and so this just shows you people want to read about Dogecoin and not so much about payment order flow as a word.
Confession: I don't even know how to buy. Does anyone in chat know how to buy Doge? I really don't. Like I have a Coinbase account, which you can't buy Dogecoin on. I don't even know. Even if I wanted to, I wouldn't even know where to go to buy Doge. Try to help us out if you know where to buy Doge. Drop it in there because now I'm just curious. I just don't even know where it can be bought. That being said, Chubbs, this was the dessert. Let's give people their vegetables a little bit, in the form of an article that actually provides value in the form of education.
Yes, sir. So we don't have time to go deep into this article right now, but April is Financial Literacy Month, and I put out a request a few weeks ago asking readers and our Benzinga users, if there's anything in terms of, from an educational perspective, what they would like to learn more about, or what they would hope to teach their kids about, maybe as with something related to market dynamics or just stock trading in general. And one of those was somebody asking about what exactly is payment for order flow. And so, our market expert, Wayne Duggan, put this together, and we published this overnight, earlier this morning, with some insight from our own Dennis Dick, as well as Themis Trading's Joel Saluzzi, who's, both those guys are just, really know their shit when it comes to market structure and market performance. And so, Spencer, if you could drop this in the chat, I really encourage all of you out there to give it a read. It's not very long. You'll only take about 5 minutes to take it all in, but it'll at least give you a nice little snapshot about, how these order flows work.
My favorite fun fact about payment for order flow is that Bernie Madoff came up with it.
Exactly. So very timely, given his passing a couple days ago.
Yeah. All right. What else? What else did you want to discuss here? You sent me this link. I didn't even look at it. What is it? This is
So this was starting to get some attention last night and this morning as well from the retail crowd on Twitter and even on Reddit. So obviously people are trying to find the next big short squeeze after the GameStop frenzy a couple months ago, and S3 partners who are known for having a lot of solid short interest and short percent of float data. They have weekly newsletters and weekly reports that go out. And interesting one that really caught people's eye was Clover Health, CLOV, which debuted only about a year ago. I think it was last June when it became public.
Well, this was it was a SPAC.
And so, this was a list of the 8 U.S. stocks with the highest short percent of float, with a minimum of $100 million short interest. And Clover Health's with an eye-popping 144%. This really, a lot of people, readers last night were questioning how accurate this was, or that we must have been wrong. But this is what S3 who was accurate with their GameStop numbers. This is what S3 reported earlier this week. And if you look at the chart, Spencer, I believe Clove is actually up a few ticks today.
20% today. 20%.
Oh wow. Okay. Yeah. Before I hopped on here, it was only up about 6-7%. So definitely watch this one. This could just be a retail trader frenzy today. I don't know if it'll spill over into next week, like GME. Yeah. But definitely keep an eye on this one, and definitely be careful out there.
Just so everyone knows, S3 does have a good reputation when it comes to this stuff. There are a couple of firms. S3 is one of them that are known around the street as having good short data. I think Trian is another one. Trian. And but so like I would rely on this. We know there's a lag in the reporting of this information in the exchanges, but I would rely. They're a credible source in my opinion. Also on this Clover chart, who the hell is short Clover right now? Like, why are you short now? Like, this thing went from 16 to 6. Why are you still short? I mean,
I forget how long ago it was, Spencer, but I believe Hindenburg, who really hurt Nikola.
That was up here though. That was in double digits.
Yes, that was back in February, right?
Right. That's what I'm saying. Who's still short this thing?
Well, we'll see if there's another hedge fund that's bleeding after today. Hopefully people aren't getting burned. With their livelihood by these kind of pops and drops, but we'll see how it shakes out.
Someone get Bill Wang on the phone. I bet you Bill Wang is short this. I'm seeing Nikola, Blank, a lot of EVs. Anyway, interesting. Just like so let's say you short Clover now. The most you're gonna make is like, well, I mean now it's up to $8, but this morning $7 there. That's what we're talking about. We're talking about $7. If it goes to zero. And nothing ever goes to zero all the way. But yeah, I don't know who would still do anyway. I don't know. That's a conversation for another day. But Jason Chibnall is the managing editor of Benzinga. Oh, wait, I can't let you go. I cannot let you go without asking about WWE. Have you on last week because of the quarterly meeting. I didn't get your thoughts on the NFT, the Undertaker NFTs. I know you have an opinion though. Give me your take real quick on WWE in the NFT space.
I mean, they have an unlimited supply of IP that they could turn into NFTs. I personally think the NFT craze is a little silly. I mean, I would never spend however much money just to own, a digital, the digital rights or the digital copy to a moment in time or whatever it may be. But WWE, especially with as passionate as their fan base is, and it's not nearly as big as it was 20 years ago, 30 years ago.
Yeah.
But they have a huge opportunity to create and sell these things. And they're also packaging it with a few other little extras, like, you can get a piece of memorabilia that also comes with it. A large chunk of the actual money that'll be generated is going to charity, to the best of my knowledge. And so they're doing it for a good purpose. And they started with a couple based on their legend, the Undertaker, but they could create a new one every single day and never run out, especially with at least for pro wrestling fans, with a lot of like iconic imagery and iconic moments that they can create into an NFT.
Okay, so not bullish NFTs, but you like what WWE is doing. Well, you always like WWE, don't you?
I do. They had WrestleMania last weekend. It was their first live show in over a year. They had, between the two nights, they had 50,000 people there, which was, I think aside from the Super Bowl, the biggest crowd that any sporting event or any type of event has had since the pandemic started. So it was a good show, and it was, you could definitely see that the performers stepped their game up a little bit, knowing that they were going to be performing in front of fans. The product has been so with performing in front of no audience on a week-to-week basis.
Yeah,
I still think the better pro wrestling product out there is on Wednesday nights on TNT with AEW, but they knocked it out of the park with their flagship WrestleMania event last weekend.
Shubs, I look forward to the day when we can do another Benzinga outing at a wrestling event. That was fun. Jason Chibnall is the managing editor of Benzinga.com. Shubs, thanks, man. Have a good weekend.
Thank you, Spencer. Same to you all.
All right. It is 11 o'clock, which means I've got to segue into SPAC's attack with Mitch and Chris. Chris should get like a day off or something for this Dogecoin article that is blown up for us here. So smash the like for that. Smash the like for Shubs. I did want to mention, and I didn't really mention this too much this morning. I put it in there like once at the beginning, but today's the last day for the pre-market prep Benzinga swag giveaway. Putting the link in chat there. Enter for a chance to win $100 in Benzinga swag. Also, pro.benzinga.com. Enter the promo code YouTube20. It's on the screen there, YouTube20. That'll get you 20% off any Benzinga Pro subscription. You can also just do a regular old 2-week free trial. No credit card needed. to check it out and enter the code YouTube20 if you want more than a trial. Actually get a discount on your Benzinga Pro. If you have your own audience, you want to become an affiliate of ours, benzinga.partnerstack.com will get you 30% all of any new subscription that you send to Benzinga Pro. What else did I have to mention? I think that was it. Yeah, smash the like, guys. Go ahead and subscribe to our new channel, Benzinga Clips. We're trying to grow that from scratch here, so we appreciate that. Spax Attack is up now. I'm going to hop, and I'll see you guys in a little bit here for anything. I've got options explained. I'll be on with Robert Roy, too, and we've got my Bitcoin and gold debate at 3:30. So I'll see you guys then.